Let me ask you about the expectations then for green finance through 2020. Clearly, it's taken on a legal aspect. The insurance industry very interested in what's happening here as well. How much appetite do you see, and what are the barriers to more appetite from investors for green investments?
Well, we're absolutely seeing a real rise in the interest in investing in the green sector. We're seeing this particularly from pension funds. 5 years ago, we didn't have pension funds calling us wanting to invest into this sector. Now we absolutely do. In a recent survey, we asked 100 global institutions what their thoughts were around the renewables sector. And they told us that over the next 10 years, they expect to really double their allocations to this sector. It's a very substantial increase. I think it's really being powered by pressure from a variety of different stakeholders. Clearly, pressure on corporates from shareholders is becoming more important. But also seeing this very significant rise from pressure from members of the public, from students, pressure on endowment funds to change. It's really quite a broad-based surge in demand. And this is also really driven by, I think, expectations being set at the national level. COP25, a little bit of a damp squib. Looking ahead to COP26, I think the UK government will be keen to inject more momentum into this process.
Okay.
And so I think it's going to be a big rise.
It's interesting that you also cite in some of the research I know you've been doing that almost half of global respondents, these are money managers, cited energy price uncertainties as a key blocker to getting involved further in investing in renewable energy infrastructure. Is that uncertainty about the relative pricing of green energy versus oil? Because we see plenty of oil market volatility just this week, don't we?
Well, absolutely. When you look at, say, a solar farm or wind farm, you're making an investment that is 25, 30 years long. And so you're pricing that on the basis of an expectation of what you're going to sell that electricity for throughout that time period. Going back 5 or 10 years, most renewable assets were very heavily subsidised. The first solar farms that we built in 2011, subsidies accounted for about 80% of the revenue stream. Now, though, that's not the case. We're building solar and wind farms in half a dozen countries where there is no subsidy. The only source of revenue will be selling the electricity. So visibility of that revenue stream is critically important. There are ways to de-risk that. Corporates can enter into long-term power purchase agreements with the owners of renewable assets. We see that particularly with US tech firms, but also now increasingly with a wider range of businesses who want to lock in power prices, and that can provide certainty of power price to the owner of the asset.
We started this conversation covering a sort of legal challenge to Barclays, but on the other side of things, how do investment firms balance their fiduciary duties to investors to get the best returns? And maybe some of that is available in fossil fuel-related investments. How do they balance that sort of legal requirement alongside the judgments that we're now expecting them to make about what is and is not an appropriate investment?
Well, I think it's been very interesting that in the UK, the Pensions Minister, Guy Opperman, has been absolutely clear that he's expecting pension funds to think about climate change as part of how they approach their investment policy. Back in October, rules were changed that meant that trustees are now required to think about climate change. So the idea that investors' interests are purely served only by looking at financial returns in isolation, that mindset is starting to change. And I think the UK is a bit of a leader in trying to drive change from the pension fund side. I think other countries will probably follow that. But we expect that this will end up pervading more sectors. I think every asset manager, every pension fund CIO is now trying to think about what is their approach to sustainability.
Yeah.
You can't duck it.